Hello and welcome to the Rupeeting podcast. My name is Ayush and we have Chaitanya and Pratik on the panel once again today.
Yeah, guys.
Say hi, guys. Everyone look damn
Hello,
lively as usual because again we're recording at the last minute on Saturday at
we're
9.
working in the middle of a long weekend, so we're
Yeah,
excited. Woo.
damn excited. Good Friday and Easter weekend. Did you all do anything on the
This
weekend?
is this is mediocre Saturday.
Yeah, Good Friday, mediocre Saturday, shitty Sunday.
Nice.
Man, okay, let's do this. So, this week's talk is another turnaround story that we're covering once again because as a company we really do believe in the possibility of turnarounds having a very multi-bagger or monumental effect on a stock because of their ability to bring themselves out of bullshit and then propel themselves
And
towards
giving them second chances also.
exactly, yeah. So we love giving second chances at, not to interns though. If you fuck up, you're out. Yeah, but
And not to
companies,
access.
yes, and not yeah. Yeah. But in this case, also, we are giving a second chance to a company that caused a lot of harm to a lot of investors back in 2018, 19, 20. And now, since 21, 22, 23, they've really turned their game upside down in a good way. And speaking of bullshit, the company's name is Indiabulls Housing Finance, company that lost 95% of its share value in the span of a year and a half from September
Mhm.
2018 till about March 2020, right before COVID. Yeah. So what
95%.
happened? Yeah. Go ahead, Pratik.
95% they lost
Yeah.
value.
It was crazy. So the stock price went from like 1,240 ish. That was the peak to about 80 rupees. 80 rupees. Yeah. So that's
Some
crazy.
geniuses can say it has fallen more than 1,000%. But yeah, that's not how it works.
That's not how it works at all.
Dude, but मैं ऐसा ही सोच रहा हूँ अभी किसी का उसमें अलोकेशन रहेगा कुछ 10% अपने पोर्टफोलियो का.
Oh, they're gone. They're gone. Arey, I made that mistake where when I just started like investing and like knowing what stock selection means, I had invested in two stocks: Tata Power and Indiabulls Housing Finance, and my
You
Mhm.
did
portfolio
invest
was
in.
just two
Both were
stocks.
below 100 rupees, right?
At that time, yes, yes, yeah.
So it's not called
But
investing.
sort of, I
We
just
all know.
threw, yeah, I just like by mistake I put money in the stock market.
Uh,
And that particular holding, I lost about 20% on it, but Tata Power is still up like 250%
mhm.
since then. So
अरे
fuck you
मल्टी
guys.
बैगर.
It's up.
Yes.
It's up. Then we can say it's investing.
Yeah, thank God. Otherwise, it's trading.
Yeah.
Yeah. But the company did had a lot of shit happening all at the same time for it. Quite a bad phase in those 2 3 years for the company, and now that's almost entirely turned around, and they're looking forward to a much cleaner future as opposed to the dirty stuff that happened before.
Mhm.
So we're going to break down the story a little bit, go across three areas of where shit went down during the 2018, 19, 20 era and how they turned that around in their favor in the 21, 22, 23 era and how 24 onwards they're now poised for probably amazing growth. So yeah,
Yeah.
I think the trigger event for all of this, like what started this and why we specified September. Actually, in general, September month for markets has been quite
Markets,
historically
yeah.
unlucky. Yeah, because September 2001, 9/11 hit. Everyone got fucked. September 2018, Lehman Brothers crashed. So,
2008.
sorry, 8. And 2018 was what we're talking about.
2018 was
Yeah.
our.
Mhm.
So,
I left.
Pratik, why don't you kick us off and tell us what happened in September 2018?
Yeah, so as Ayush said, September is quite a lucky month for all of us. So yeah, in
I
India
was
also,
born in September, bro. September
and
13th,
So
2013.
was Narendra Modi. So
Oh, I what? No, I'm not going to react to that news. What is this? We don't have any political views on this podcast. Neither do we give financial advice on
we
this podcast.
we love free time outside
We
gym.
love,
So
yeah,
yeah,
yeah, we love freedom. Cool,
Yeah,
yeah,
cool.
Pratik, go ahead.
as you
So what?
said, September is a lucky month for everyone. Yeah, in India also it happened in September only. So there was
Yeah,
this biggest, one of the biggest financial crisis which happened in India, the ILNFS scam. So around 90,000 crore worth of debt wasn't repaid by them. So just because of the amount, we can know how much of a pressure it must have put on our financial system back then.
right.
And
Just
because
for
of that,
context, so
yeah.
let's talk about what the industry was like. ILFS, what did they do? Why did they have like that much debt?
Yeah, so it was a non-banking financial company, and basically
Right,
they were providing loans to infrastructure players and
Mm.
for infrastructure projects basically. So and they gave so many loans to just one particular sector, like the infrastructure sector, where we know that the repayments are going to be a bit slow, because as the project materializes, you will start getting your payments back. But
right.
that didn't happen during that
Right.
time. So because of that, there was a 90,000 crore worth
That's a
of
lot
debt
of money, bro.
not being
It's a
repaid.
lot of
Yeah,
money. How many zeros is 90,000?
I was just going to ask
11.
you that.
That's 11
90,000?
zeros. 90,000
90,000.
crore? It's about 11
11.
zeros, yeah. Yeah,
Yeah, I think so. Yeah.
that's insane.
So
Most
yeah,
people
and
don't see that much money in their lives and they just lost it. Okay, so I think to be fair, it's not lost it. 90,000 crores was the total debt, but I think they paid off about 52, 55,000 crores,
yeah,
and
yeah, I
still
think
the
then
rest of it is unpaid.
yeah. So I think then RBI had put a committee to get to resolve all the unpaid
Yeah,
debts. I
yeah.
think they
They
could do it
basically
around
wound down the company, right? There was no
50%.
bailout or anything like that.
Yeah, yeah. So around
Yeah,
55 to
Mm.
60% of the money was recovered, but then
yeah,
the rest is still not recovered.
yeah. So
So even
apparently
that
the
is
math,
a huge
yeah, go
amount.
ahead, go ahead.
Even
Yeah,
then, it's
yeah,
a huge amount of not
absolutely,
money not being
absolutely.
repaid.
So I think so to break it down, right, because this is quite an interesting statistic that in the 90,000 crores, let's say they paid off 55,000, that leaves us with what, 35,000 crores left.
35.
Was, yeah.
उसमें से 10,000 crores is what the special committee set by RBI was able to recover from selling off
Hmm.
assets, dissolving the debt into equity, and it's like completely breaking the business
Restructuring.
down, restructure completely. But the rest 25,000 that is still left unpaid, the RBI had the option to bail out, but they chose not to. And because of that choice, it sent so much widespread panic in the entire stock market that 25 lakh crore worth of investor value was lost in the weeks to come. So in the first week itself, 10 lakh crores got wiped out because everyone exited the NBFC sector. And then subsequent weeks, may another 15 lakh crores was continuously wiped out in the month of September,
It's
October.
like RBI wanted to set an example out of them for whole
Yeah,
year.
and
Yeah.
I
Like,
mean, a
we're
lot of
not
people,
gonna, yeah.
exactly, and a lot of people dissed on that move by saying ki they could easily have bailed them out. But as you said, right, it's a very example setting situation that they used.
It was a very hard step, but it was necessary
Yeah,
as well. Of course,
absolutely.
benefit of the hindsight, we can talk about it. But
Correct.
yeah.
Yeah. Yeah.
That's true. Yeah, and because then NBFC earlier weren't in the radar of RBI that much, as in they had their own
Uh,
set of rules, and
Yeah.
RBI had a different set of rules for banks, which were very strict. But then RBI, as you guys said, that yeah, they wanted to set an example, so obviously they did not bail them out. But then
Yeah.
I think after ILF and ILNFS, there might be a lot of smaller NBFCs also, which there were a lot of scams, there were a lot of problems in their working, must have come out because this was a big scam. So then I think there were
Right.
a lot of smaller banks also, and smaller NBFCs in which there were scams, and
Yeah.
and the industry must have been starting to consolidate them. Yeah.
Yeah. True. But okay, let's again for the benefit of the viewer. How does an NBFC? So you said they defaulted on 90,000 crores, or like they had that much debt that they had to repay. But how does that work exactly? Like, why does an NBFC have debt?
Yeah, so NBFCs usually borrow money from different types of funding sources. So
Right.
majorly they can borrow from banks,
Yeah.
and then they can give put out debentures in the market, So there are few sources from which they can get money. So this is the debt
Right.
which piles up on their balance sheet.
Got
So
it.
at that time and after this particular thing, this particular crisis, the banks were also hesitant to give money to the NBFCs because of such a crisis being brought out
Right.
in the picture.
So
So
you're
yes,
basically seeing that money that they take on as debt is what they eventually lend. So how an
yeah,
NBFC
what they
makes money
eventually
is
lend.
cost of borrowing setting off with cost of lending.
Yeah.
So whatever interest margin disparity or arbitrage there exists, they make money off of that.
They make money on that spread. Yeah.
Got it. And in this case, because the debt was so high, and you mentioned the fact that a lot of ILNFSs or in general NBFC sector was lending to the infrastructure or maybe real estate projects, which either they take years to materialize or they don't materialize at all.
Materialize at all.
So
So I
then,
think
of
there
course, that's a
might,
huge problem.
and then that's the problem also. So then there must be some asset liability mismatch also. Like
Right,
they
exactly.
have a lot of borrowings, but then they don't have any cash flow to repay.
Pay.
So yeah, so I
That's a
think
huge
debt must be
problem.
piling up for a lot of NBFCs during that period when the loans aren't
Yeah.
getting repaid.
So I think India Bulls also falls under a similar category where they had about a lakh crore, 1 lakh crore worth of debt piled up on their books and heavily invested in the real estate sector, with about 80% of their loans being lent out to the real estate space. So naturally, that would result in like a bad situation for them, as you said, from an asset liability perspective. But what that means in terms of, like, let's say a metric is a 7 times debt to equity ratio, which is from a standalone perspective also a massive number. Like,
Massive.
while the like when we learn about these ratios, whether you're a finance student or not, the ideal number is supposed to be 1. So even from that perspective, a 7 times number is mind-boggling.
Yeah, but I want to correct you in that manner.
Yeah,
I mean, for banking, we can't say
correct,
for
because
one
their
lakh because
industry
their whole
relies
business
on
model
that.
depends on, yeah, on that. So
Correct.
3 or 4 is something which is considered
Normal.
what okay, yeah,
Yeah,
for banking
correct.
companies. But
Absolutely.
still, 7 is like almost double to that also. So yeah, it's
Exactly.
not.
And like they tripled the amount of debt that they had on their books from
Mm,
2015 to 18. Now, during that phase, they also did really well as a company. They had revenue tripling and profitability tripling. But because of loans tripling and then them having lent to sectors that pay off in a very long term, they faced a trouble. And in fact, to sort of uh, come out with a quick fix, they even tried to partner or merge with another bank called Lakshmi Vilas Bank, which would then give them access to Lakshmi Vilas's funds and pay off that debt quicker in a low
mm,
cost manner.
That could
But the
have been,
RBI,
yeah,
yeah, I mean, it would have been a very smart move. I think it was also spearheaded by the promoters at that time, Samir Gehlot and family.
yeah.
But because the RBI said no, like blatantly, it didn't materialize. Because so the thing with NBFCs, I think there is the regulation so gray, or it used to be gray at that point, that this seemed like a backdoor entry into the banking sector, which would then give NBFCs way too much power. And ideally, it should be banks uh, controlling an NBFC, or banks merging with an NBFC, or having like a majority stake. But in this case, it would have been reverse, which would have been quite a first time move in the industry. So RBI was hesitant.
Mm.
Yeah. But the
Just to make
promoters
it
really,
clear for
yeah,
our
yeah,
viewers, the primary distinction between the bank and an MBS is bank
yeah,
can borrow money directly from RBI, which
mm,
is a very cheaper source of funds, which
yeah,
NBFC can't, and
yeah,
that's why they wanted to merge with the bank.
correct, precisely.
Yeah, accept. Hmm. And that was, I mean, all was this was of course going on against the company.
Mm,
But one additional thing in this company was that company had to deal with public interest litigation which was filed against them. So the litigation alleged that the promoter, which you mentioned, Mr. Samir Jallo, they siphoned the fund which was borrowed by Indiabulls Housing. So that was also,
yeah.
yeah, yeah, yeah.
My God.
And also it was alleging that the fund was used to guess what, boost the share price of the company.
Of course, of
So
course.
hmm.
Of course.
the
So
BSS.
Actually,
it was,
it's actually very interesting that you mentioned that, because so Samir Gehlot,
hmm,
his mom, uh, I mean, it's funny that you also mentioned Modi ji earlier in this call, because his mom, Krishna Gehlot, I think that's her name, is also a very integral part of the BJP party and is a
Yeah, I think
close,
Gehlot
like
has a
within
lot of
the inner circle.
politics.
Exactly, yeah.
Yeah.
So he comes from a family politicians, and the other allegation, along with having pumped the stock price, is funding uh, electoral bonds or donations to the party.
Hmm.
Yeah. Oh shit, that's actually pretty bad.
So that was also another way of increasing investor faith by
Yeah.
pumping up stock price, I guess.
But then it
But
did the
yeah,
opposite. And
that didn't bode well
yeah,
for the
correct,
company. It in fact ended up in investor losing more faith in the company.
correct. Yeah,
So no one wanted to touch it. I think just
the
stock of
stock return.
Indiabulls Housing Finance. Yeah.
Yeah, yeah, for good reason, right? Like three different things going wrong. I mean, again, fair enough. The industry thing wasn't their fault, but it opened like
Ah,
a wound that was just like a scab before, and like
hmm.
exposed the entire
It,
industry
it's
in
it's
one
all
go.
of course it's all related.
It's all
Once there
related,
was
yeah.
an opening, yeah,
Yeah,
it started opening.
correct.
Yeah, and it's such a big institution is
Oh yeah, yeah.
coming
Like
up.
Indiabulls Housing Finance at
The
that
whole
time, right?
sector is going to be under pressure for a long time because
Absolutely.
then there will be some regulatory authorities who will now be a bit more strict
Oh yeah,
and
as they
just
should.
to keep them in
Yeah, we
check
can
to
see now
prevent something like this
now
happen. Yeah.
how RBI is
Yeah.
now not even taking a small chance.
Oh yeah,
Yeah.
yeah,
Now they've become very strict. I think it just feels like NBFCs are also under the banking
yeah. They're
provisions.
being that stringent.
Yeah,
Yeah,
just they're
Ah,
being treated just as banks now is what I feel.
correct.
I mean, they've
hmm.
become very strict. So I think RBI is trying to regulate this unregulated market, and I think they have been successful in
Right.
most of their policies
But
regarding the NBFC. Yeah,
Yeah.
and also NBFCs have a good reach. They have better reach than banks. So yeah, because of so the RBI also knows that yeah they will need NBFCs help to increase credit growth in the country. It's not just banks who can tap into all the markets. So yeah, then NBFCs also help them back, as in they help them increase the credit growth in the
Yeah.
country for 80 with a CAGR of 18% between this period of 2013 to 18. Before that, so yeah,
Yeah. That's true, and I think so. Most of it was fueled by personal loan growth. So that particular segment, from being almost non-existent back in 2018, because not a lot of people trusted the NBFC system to get personal loans. Now it makes, I think, a third of the entire loan book for nationwide NBFCs, and that was the highest growing segment also at like 33% CAGR, while the entire rest of the industry grew at
uh,
18%. So it's
most of
an
the credit of
insane.
course goes to Bajaj Finance. I mean the way
Oh
they have
yeah,
done
mad,
it,
crazy stuff,
tremendous.
crazy.
So
I think everyone who, at least every second or third person watching the podcast right now, would have gotten a call from Bajaj Finance at some point in their lives.
yeah, they're very aggressive that
They're
way.
very aggressive. Remember, right? Like a couple of months back, I'm not sure if it was the CEO or someone from the board who said that, oh, if you don't want our calls, then like basically
Yeah, on
fuck
the
off.
con call, right? They
On
someone
the
had asked
con
this
call, yeah.
question. Yeah, I remember. And Twitter, maybe a lot of people were tagging Bajaj and telling them
Saying that.
not to call. Yeah,
So then he took that very seriously and said, "Ki no, like if you don't want our aggression and like our selling tactics, then you're not our customer. So get out of our way."
but like it or not, that was helped them the growth that we
Absolutely,
witnessed today, and
absolutely.
also it has helped tremendously to the industry as well. So
Yeah,
as Pratik mentioned, compared it grows by 14% between 2013 and 18. But
yeah,
after the crisis and all, in last 5 years, that is 2019 to 24, it has grown by 18% CAGR. So the crisis, as we just talked about, it also helped in a very tremendous way to form a structural change of NBFCs in the country.
correct.
So that is
Yeah,
definitely something that that's given.
yeah. Which I think also incited all the NBFCs in the industry to like buck up their game, right? Like for example,
Yeah.
even in India Bulls Housing's situation, they
Mm.
realized very quickly that by 2019 itself that okay, this merger thing is not going to work. So we're going to actually have to repay
Yeah.
our debt in a staggered, slow but real manner. So I mean, they started doing that just that and like using chipping away at their reserves, chipping away at their revenue, uh, using as much of uh, cash balance that they could to forego growth but repay debt. That's what they did. So while you see revenues going down by like it's 13,000 crores in 2018 and now it's 8,700 crores. So that's about like 55% of what it used to be. It's
Yeah.
also because that they reduced debt by that much from 1 lakh crore to about 48,000, 50,000 now. So it's not like, oh, revenue ghat gaya. It's because book hi ghat gaya.
Hmm.
So they really focused on
Right.
the debt cleanup bit, and because of this whole thing, like because RBI started putting pressure, because the NBFC sector was seeing growth, so the only way to survive was to clean up their act, and then they did just that.
Hmm.
And to make sure that, so I think we mentioned, like you mentioned, right, how a debt to equity ratio of around 3 times or 2 times is
Hmm.
what's ideal for
Best
a
standard.
banking. Yeah, that's exactly what they've achieved within 3 years. So
Yeah.
that's insane.
Yeah, I mean, if something goes this much wrong, the
Right.
magnitude of something, there
Yeah.
is no easy way out for sure. So
Correct.
promoter realized it. Hopefully,
Yeah.
fortunately, in this case, it was sooner rather than
Yeah.
later.
True.
So also the public interest litigation wala thing.
Yeah.
So fortunately for them, it was dismissed in the court, and it
Thank
caused.
God.
But of course, it caused several reputational damage. But the promoter, Mr. Samir Gehlot, decided to step down and sold all of his 22% of stake in the company.
Yeah.
Anyway, he always wanted his company. I mean, of course, now he can say that he always wanted his company to run by professionals. But yeah, we never know. Circumstances can
Yeah.
change people's statements. But
And the professionally
from
hired
what
also
we
is like
can
a
see,
big deal, right? Like who
yeah, yeah,
replaced him
yeah.
on the board?
The BlackRock, the mammoth of global
And I
financial.
think they also hired, so not hired, so on the board or among the non-executive management committee was ex-former deputy governor of
Yeah,
RBI.
Yeah, yeah.
Subhash
Yeah,
Mishra.
yeah, correct, correct.
Yeah.
And he
So
replaced, so
he was
once,
replaced.
yeah, yeah.
Hmm. And
So
BlackRock,
that's
of
also
course,
a big deal.
buying and ex-RBI, as you mentioned, that
Yeah,
definitely instilled the faith that
yeah,
it has lost.
correct.
And
Now
dude,
we
I
don't
also
know the actual reason why it was dismissed
Yeah,
because,
yeah.
as you said, his
But it is
mother
a
was.
good, it is a good way to have exited the company in like respect, in a
Huh.
respectful manner. Right? Speaking of
Yeah.
respect, do you know what they want to change their? So Indiabulls Housing is also doing a rebrand, which is in the works right now.
Uh,
It's going to be called
Name changing.
Samman Capital. So
Arey
it
baap re.
respect capital.
It's
Yeah,
translation to respect.
crazy. And like I think, I mean, although it's a little
Samman.
extra, I think it's just like a way to continue to build that faith with the investors again. That okay, we're not the same
Yeah,
old
I think
Indiabulls
the
company.
brand image of India Bulls is now severely reputed.
Trying
So
to
they
carve out
Completely.
just
a
want to
new
get
identity for
rid
themselves for
of
the
it.
next leg of
They
growth.
want, yeah, yeah, exactly.
Leaving everything bad behind, yeah.
Yeah. Actually, it's good you mentioned next leg of growth. So we've already established how the NBFC industry uh,
Hmm.
had its issues back then, and now those issues maybe don't exist as much anymore because of RBI's work into it, because of NBFC finally gaining a
Hmm.
conscience, or whatever that reason may be. But specifically to India Bulls, why it's interesting over the next couple of years is they're starting this new business model where instead of keeping all the, so right now they have a lending capacity or AUM of about 70,000 crores, out of which 48,000 crores ish is in loans. So now, while they have deducted or repaid that much debt from 1 lakh to 48,000, that 48,000 crores is also going to go down to about 36, 25,000 crores. And what they want to do instead is instead of taking on or borrowing from banks and borrowing via bond issues, what they're going to do is they're partnering with banks instead and
Hmm.
splitting the load of the lending that they do. So, for example, if I'm an NBFC and I
Hmm.
partner with Yes Bank and Punjab Sind Bank, which are
Hmm.
two of the largest partners that Indiabulls has, uh, instead of me borrowing money from them directly, I'll just take a little bit, and they then directly pool this money into one loan
Yeah.
and then disperse that.
Yeah. So it's more like a co-lending thing.
Exactly. Co-lending
Yeah.
is like a shared
And keep
responsibility.
against light, yeah.
Uh,
Yeah. So it keeps it light for the
so the risk,
NBFC.
so the risk also gets divided between the both of
Absolutely,
the.
and by so much, by so much. And like banks, because of their sheer size and the fact that there's so much stringent regulation, it's very unlikely that they default. So there is a risk mitigation there as well. So
And
instead
the
of
Yeah,
banks,
having,
coming in
they
with
have partnered with.
I mean, that's
Yeah.
also, in fact, actually, that was a huge issue that we forgot to mention, that because of their exposure to US Bank in the 1819 era, another reason why investors continue to be like, nay, nay, I don't want to invest in this company anymore. But I mean, now they're just like co-lending partners. So I think Yes Bank's
Right.
reputation's also really,
Now
really
it's,
improved. So
improved.
improved.
Yeah,
Yeah.
of course.
yes, another
And also
turnaround story that we
they're
can maybe cover
co-lending.
at some point.
If they're co-lending, so they get that
Yeah,
low cost access to low cost funds.
yeah,
So
yeah,
which they tried
absolutely.
back in 2019
Yeah,
by trying to merge with
exactly.
Yeah.
Lucky Glass.
So hopefully that then brings their margins back here, because at some point back in 2015 to 18 era, they'd gone up to like 90% EBITDA margins, which is crazy.
Crazy.
But now it's down to like 84, 83, 82, because that's also because they've been cleaning up. So they haven't focused on business. But with this co-lending model, it might just like boost profitability, hopefully.
Mhm. Again, rather than looking at EBITDA margin, since it's a bank,
Yeah.
I think NIMs
Yeah.
are the net interest
Correct.
margin are
Net
the
interest
actual.
margin. Yeah, true, true. True, true. That's a much better metric to
So,
look at. Yeah.
yeah.
So that definitely we'll see growth there as well.
But I think also, as we mentioned, BlackRock had bought some stake, but it
Yeah.
wasn't only equity that they were supporting the company with. I think in the past few years only, they have also issued $350 million of
Oh,
bonds.
months
Yeah,
like
yeah.
Abhi, Feb में हुआ था. Yeah,
Okay,
yeah,
yeah.
हाँ, correct,
So
correct,
that
correct.
was also BlackRock also bought into that as well.
Yeah, yeah.
So
There was a lot of
looks
UAE
like,
funds
hmm,
and BlackRock
yeah,
coming in on that. I think that's
hmm,
also related to the whole Samman Capital rebrand, and they want to enter
yeah,
whole retail lending more instead of
lending.
that
Hmm,
archaic retail real estate and infrastructure stuff. They want to get into personal lending far
Mm,
more.
so that, yeah, so now the ticket sizes for loans will also be very less as
Yeah,
compared to
yeah.
before if they're
So the
still.
hmm,
chances of default also then reduces significantly.
hmm.
Yeah.
Hopefully, they will
Yeah.
learn from that mistakes.
Yeah, I really hope so. Yeah. Because I don't want to make the same mistake again, having invested before and then. I mean, now I'm going to try and look into this company. At least I'll keep it on my watch list to see what's going to happen. But
To see how they are progressing.
yeah,
Yeah.
I need to see how they're going to. I mean, it seems like a sure shot victory, but you never know, right? Anything could happen.
Never know. Yeah.
But pretty cool stuff.
Yep.
Yep. So let's see whether Samman Capital ever materializes. But all we do know is that they've really bucked up and got themselves up from their bootstraps. And now we'll get to see a different side of Indiabulls Housing Finance that's more holistic in its growth. So do watch out for this story. And if you want more such stories, then subscribe to Rupeeting. Head over to our
Mhm.
website to see more of what we offer apart from just giving you all stellar content in 30 minutes. And that's about it for this week. Stay tuned for the next episode where we cover yet another interesting story. And that's a wrap.